What is accounting? Accounting is the process of recording, classifying, summarizing, analyzing and interpreting of financial information, and communicating financial information for owners, managers, and other interested parties. Accounting consists of three basic activities such as identifies, records, and communicates the economic events of an organization to interested users. Types of businesses. Three types of businesses operated for profit include service, merchandising, and manufacturing businesses. Service business is a business which sells services directly to consumers or other businesses. Service businesses provide services rather than products to customers. Example: Ethio Airlines transportation services, hotels, banks, insurance, etc. Merchandising business. Revenue activities of a merchandising business involve the buying and selling of merchandise. They purchase merchandise which is resold to customers. Example: Walmart general merchandise, Amazon.com, internet books, music, videos. Manufacturing business is a business engaged in manufacturing some product. Example: General Motors Corporation cars, trucks, vans, Dell Inc., personal computers. Horror brewery forms a business organization. Based on their formation, business organizations are classified as follows. Sole proprietorship. These firms are owned by one person, usually the individual who has day-to-day responsibility for running the business. Sole proprietors own all the assets of the business and the profits generated by it. They also assume complete personal responsibility for all of its liabilities or debts. In the eyes of the law, you are one and the same with the business. Partnership. In a partnership, two or more people share ownership of a single business. Like proprietorships, the law does not distinguish between the business and its owners. The partners should have a legal agreement that sets forth how decisions will be made, profits will be shared, disputes will be resolved, how future partners will be admitted to the partnership, how partners can be bought out, or what steps will be taken to dissolve the partnership when needed. They also must decide up front how much time and capital each will contribute, etc. Corporation. A corporation, chartered by the state in which it is headquartered, is considered by law to be a unique entity, separate and apart from those who own it. A corporation can be taxed, it can be sued. It can enter into contractual agreements. The owners of a corporation are its shareholders. The corporation has a life of its own and does not dissolve when ownership changes. If you get the video is helpful, smash the subscribe button, like and share to others. See you in the next video.